volumes to grow at a compounded annual growth rate of 4% over FY19 to FY21. Similarly, for HEG, they see an upside of 58% and expect their volumes to grow at a compounded annual growth rate of 5% over FY19 to FY21. Back to you.
Okay. Thanks so much, Yash, for that. But it's time to get into management on the show right now. Let's speak to the management of Arshiya. The company is, let's get the management of Arshiya. The company is planning to a demerger of its railway business and consolidate its warehousing business. Ajay Mittal, Group Chairman and Managing Director of the company, is talking to us currently on these plans. Thank you so much, Ajay, for taking the time out and speaking to us. Firstly, let's talk about this demerger plan that you have. You plan to separate the railway business and consolidate the warehousing business. What's the strategy? How are you planning to do it? What's the view ahead for both these businesses?
Well, the strategy is pretty simple. We have been pioneering the concept of the free trade warehousing zone in India, though we've gone through our pains with regards to, policy issues that we had in the past. Now is the time to really consolidate this free trade warehousing business and put it in a separate entity, which is the listed entity. And we already have a partnership with Ascendis now, whereby they have already purchased 800,000 square feet of warehousing space at a whopping price of about 6,500 rupees per square foot at Panvel. And we have a forward agreement for them to purchase another 2.8 million square feet of warehousing space. So we want to keep that business in a separate entity along with the 3PL company, which is an asset-light business completely. So basically the first entity is going to be a pure developer of warehouse along with the 3PL, which is asset-light. And the second entity, which is going to be capex heavy, where there's a lot of capex required, is the rail business and the ICD business, the rail terminal business, which is where we are going to do a mirror listing through a process of the court, where we will do a demerger and actually have a mirror listing where all the capex heavy business will go into a separate entity. No shareholder actually has a loss in any manner whatsoever, but actually a gain, because the strategy for building further the capex heavy business is to really look at mergers in the space, because there would be consolidation in the rail and the PCTO, the private container train operator business, as we go along. And we'd like to be the ones who want to take the first step forward to get all this consolidation done as far as possible and move from an 18 train to about a 50 train and from a 1 terminal to about a 5 terminal business as soon as possible.
Ajay, when you say that it's a mirror listing that you're planning to do, am I guessing it right that it will be a 1:1 split that will happen? So whatever the shareholding pattern in your railway business will be, it will be the same in the warehousing business?
Well, I am not going to be able to comment at this point of time on this, because the valuations are yet to come out of both the businesses. Based on the valuation, the court filings would be done on the splitting of business or the demerger business. So I'm unable to comment, but whatever the split would be, it actually doesn't affect the shareholder in whatsoever way, in the sense whatever the split would be, even if it's 2:1 or 1:1, it would not make any difference.
Any timeline, Ajay, that you have by when will the demerger be consummated?
So we plan to actually file the scheme sometime in the first week of July in the court, which will be the NCLT court, and we hope that normal time taken is about 6 to 8 months, but given that the NCLT courts are now busy with a lot of the IBC issues, it may take as long as about a year or so.
Okay. Ajay, since yours is a business which was, positively impacted, I would call it, from implementation of unified tax regime in the form of GST. It's almost 1 year now, and we've been discussing how GST has benefited the economy or how it has not benefited yet. Could you tell us how is the last 1 year since the time GST has been implemented? How has it benefited your company?
Well, I think GST has been the biggest boon for a company like us. Honestly speaking, the kind of assets that we built and the infrastructure that we built was almost 10 years back, much ahead of its time. And we were expecting GST to come into this be implemented in this country long time back, but thanks to this government, it ultimately got implemented almost actually a year back from today. you know, the GST has actually allowed all the big companies which are our target clients, whether they're Indian companies or foreign companies, to relook and rejig their entire supply chain. And whilst doing that, they realized that hubbing and spoke is the real way to move ahead. So free trade warehousing zone, our domestic warehousing business has been affected very, very positively with the GST regime. What was really happening in the past was that people were having warehouses in virtually in every state to avoid double taxation and all those kind of other issues that they had. Now with GST, I think the biggest, I would say we are the luckiest people to be at the right place at the right time now.
Ajay, I was just looking at the debt picture. Your debt was close to almost 2,200 crores approximately. What's the plan to reduce this further? And once this demerger happens, will majority of the debt still be on the railway side, and the other business will be very, very asset light?
So we have a three-pronged strategy to reduce the debt. One is that with the monetization of the warehouses with the forward agreement that we have with Ascendis is one way to reduce debt. Further, monetization of our warehouses also in Khurja free trade warehousing zone and the domestic warehouses where we don't have a forward agreement with Ascendis, but we are working with a few real estate investment trust on monetizing those assets. That is one strategy. The second strategy is that we would be looking at some QIP or preferential allotment in the very near future to reduce debt further. And thirdly, we feel that with debt coming down, with the EBITDA rising, with all the businesses which are now starting to have become operational and are churning up good EBITDA margins, is obviously going to go towards reducing our debt further. So I feel that in the next 2 or 3 years, we will be predominantly a debt-free company. And we still have to sort out some of the banks in the subsidiary level companies, which we are in discussions with them, and we feel very confident of sorting them out.
Okay, so that's the guidance you're giving, that the company will be debt-free by at least in the next 3 years. So as of FY18, Ajay, 2180 was your debt. Just if you could give us a percentage in FY19, how much are you looking to cut down your debt by?
Well, I don't have an exact number to this, but we feel that we should be able to cut down our debt by about 550 crores or so.
Fair enough. 550 crores is something that you're working with. Also, if you could tell us about the capex plan that you've lined up for FY19 and FY20.
The capex plan for 19 and 20 predominantly is towards building more warehouses in the Panvel free trade warehousing zone and the Khurja free trade warehousing zone, for which we've already tied up with Ascendis and with Edelweiss for giving us some priority funding, and there is a forward agreement to sell these warehouses. So it's really a time, it's just arranging that gap funding is what we are doing in terms of capex. And with regards to growing the rail business, it's all about, as I said, consolidation in the industry. So we're looking at more of, swapping, merger swaps and so on and so forth for growing that business. So it's really not getting any cash out of the system.
Ajay, what are you doing are you looking at monetizing any of the warehousing places that you have? You have this deal with Ascendis, but apart from it, any monetization that you're looking at?
Well, monetizing, we are also looking at monetizing our land in Nagpur. We have about a parcel of about 110 acres or so at Butibori, next to Butibori station at Nagpur, where we had planned once upon a time a free trade warehousing zone. But as of now, we don't see that fitting into our plan, because as we have grown as an economy also, and with GST now in place, we see that the western zone that we have in Panvel can actually service the entire west zone as well as the south zone. And the northern one, which is in Khurja, UP, can actually service the entire east and north. So we don't really see a need for having anything in Nagpur at this point of time. So that is one land parcel that we will look at monetizing very soon.
Okay, and are you already in talks to monetize with somebody, or you still have to initiate that?
We're in talks with a few prospective buyers, but it's not, time's not been very conducive for people to really look out and buy land at this point of time. So we are also not in a very big hurry to do so. But the plans are to monetize that within this financial year.
How much are you expecting to sell the land that you have, this 110 acres that you have? What's your expectation?
Well, my expectation is much higher than what the market is trying to give me at this point of time. But
so just tell us
I
your
think somewhere close to about
the realistic,
75-80 crores is what. Mine is 75. Well, my expectation about 75 to 80 crores. We've got offers at about 60, 65. So there is a gap, and we will see that. We'll wait. If it can be bridged, we'll be happy.
Okay, we hope that you get the price that you're looking for, Ajay. Just a word on the numbers now. If I look at your top line, there's been a degrowth in the last 2 financial years. Now, considering things are looking good, according to what you're suggesting, demerger will take place in the next 9 months. GST is benefiting your company. Tell us what sort of growth that one can expect on the top line going forward.
So actually there's no degrowth. If you look at the consolidated numbers, they've gone up. There have been subsidiaries formed in terms of structuring the entire deal with Ascendis. Hence a subsidiary of Arshiya Limited was formed where the maximum amount of revenues are going in. Now that is the reason why you see the standalone numbers to be a little lower than what they were earlier. But as we see from here, I'm not supposed to give a forward-looking statement, but I see a very, very healthy growth as we go along for the next few years. The growth predominantly for us is kind of stagnated till we build more capacity in Panvel, which is the construction is starting from next month, which is virtually 2 or 3 days later. The construction work is going to start there. The growth is going to come predominantly from our Khurja facility, which is probably the only integrated logistics facility in the country which has a free trade zone, which has the largest private rail siding to even, for container cargo as well as Indian Railway wagons. It has an ICD, it has domestic warehousing. So, and it's on the confluence of the 2 dedicated freight corridors, which hopefully should also get operational by 2019 or 20. So, and it is virtually on the Yamuna Expressway and off the very close to the new Jewar airport, which has been announced by the government lately for the second airport in Delhi. So from a logistics standpoint of view, location is very important for any logistics infrastructure, and I think we are sitting on a very good location, and we see growth coming from there, phenomenal growth coming from there.
Okay, Ajay, we'll leave it at that note. Appreciate you joining us today and taking us through what's happening with the company and what to expect going forward, and wishing you all the best. Well, that was the management of Arshiya Limited. The stock's actually doing pretty well in today's trading session. The guidance which the management has given on the debt picture is that they're looking to cut down their debt by almost 500 crore in FY19, and they also look to be debt-free in the next 3 financial years. Okay, moving on from Arshiya, let's talk about the IT pack. Tech Mahindra is readying services for its telecom clients across the world as they get